Bitcoin plummets under $108,000 just before key U.S. employment figures. Is this the calm before the storm in crypto? Picture this: Bitcoin, the king of cryptocurrencies, dropping below $108,000 right as investors brace for a pivotal U.S. jobs report. It's a scenario that's got the crypto world buzzing, blending economic uncertainty with the wild swings of digital assets. But here's where it gets controversial. Are these dips signaling a temporary hiccup or the start of a deeper downturn? Stick around because we're diving into the details that could reshape your perspective on the market. Across the board, alternative cryptocurrencies or altcoins lagged behind as traders grappled with broader economic worries. Analysts from Glassnode highlighted that the $88,000 mark has historically acted as a critical pivot point during past market corrections, a pattern that might just repeat itself if pressures mount. All eyes are on Friday's employment data, slated for release at 1:30 p.m. Universal Time Coordinated, which promises to shed light on vital labor market trends. Experts anticipate a slowdown in job creation, with unemployment hovering close to its recent highs. This report could be the key to deciphering whether upcoming interest rate reductions stem from optimism about a gentle economic slowdown, what economists call a soft landing, or from fears that certain sectors are already showing cracks of weakness. For beginners, think of a soft landing as an airplane touching down smoothly without a jolt, versus a rough crash landing that could shake things up. In the trading arena, Bitcoin hovered around the $107,000 mark, marking a roughly 3% decline over the past 24 hours. Ethereum wasn't faring much better, slipping about 3.5% to approach $3,700. Leading digital tokens softened universally, reflecting a cautious investor mindset as they awaited this crucial economic update. Delving into the blockchain itself, that's on-chain metrics for you, reveals a cooling enthusiasm for the world's top cryptocurrency. Bitcoin hasn't managed to push back above the short-term holder's average purchase price, hovering near $113,000. According to Glassnode's latest report, https://insights, glassnode.com/the-week-on-chain-week-43-2025. This threshold often serves as a crucial boundary separating optimistic bullish trends from potential corrective declines. For those new to crypto, short-term holders are investors who bought their Bitcoin within the last few months, and their cost basis is like the average price they paid. If the market stays below that, it might indicate selling pressure. Adding fuel to the market's hesitation were remarks from Treasury Secretary Scott Bessent over the weekend. In an interview with CNN, https://edition cnn.com/2025/11/02/politics/video/scott-bessent-treasury-secretary-on-trump-administration-and-tariffs, he suggested that the Federal Reserve's tight monetary policy might have nudged parts of the economy, especially housing, into a recession. Yet he argued that the central bank now has leeway to lower interest rates, potentially easing the strain. This key level has been holding back prices for 3 weeks now, after a solid 6-month stretch above it, hinting at dwindling interest at these current values. If Bitcoin breaks decisively below, it could pave the way for a more significant retreat, with the next major support zone around $88,000, tied to the realized cost basis of coins actively in circulation. To simplify, realized cost basis is the average price at which those coins were last moved, offering a gauge of market sentiment. If prices fall below, it often sparks worry about broader sell-offs. Bessent cautioned that prolonging high borrowing costs could intensify economic stress, particularly for households carrying debt. Initially, cryptocurrencies perked up on the idea that his words might bolster arguments for monetary policy relaxation. However, those gains evaporated as market players pondered whether rate cuts prompted by slowing growth might instead ignite short-term market turbulence. https://coinmarketcap.com/academy/glossary/volatility, instead of providing steady liquidity. And this is the part most people miss. Could these cuts be a double-edged sword, boosting crypto in the long run but causing headaches now? Bitcoin's share of the total crypto market capitalization stayed robust, underscoring a preference for safer bets over riskier smaller tokens. As mentioned, altcoins trailed, with the market absorbing macroeconomic uncertainties. Glassnode's experts reiterated that $88,000 has been a hallmark of adjustment periods in previous cycles, a historical echo that raises eyebrows about what's next. The upcoming jobs figures will be instrumental in guiding the Federal Reserve strategy and its potential ripple effects on digital asset. https://coinmarketcap.com/academy/glossary/digital-asset. Markets in the weeks ahead. Traders are treading carefully, seeking assurance on whether the economy is poised for ongoing relief or hinting at more profound growth challenges. For example, past reports have swung markets wildly. Remember how a surprising jobs number in 2020 led to Bitcoin's volatile rallies? But here's where it gets really intriguing. Is Bessent's push for rate cuts a savvy move to avert disaster? Or could it unleash inflation and volatility that hurts crypto hodlers? Do you believe on-chain data like the $113,000 threshold is a foolproof predictor? Or is it just one piece of a much larger puzzle? What are your predictions for Bitcoin's path post-jobs report? Recovery or retreat? Share your opinions in the comments below. I'd love to hear your takes and spark a lively debate. This article contains links to third-party websites or other content for information purposes only. Third-party sites. The third-party sites are not under the control of CoinMarketCap, and CoinMarketCap is not responsible for the content of any third-party site, including without limitation any link contained in a third-party site, or any changes or updates to a third-party site. CoinMarketCap is providing these links to you only as a convenience, and the inclusion of any link does not imply endorsement, approval or recommendation by CoinMarketCap of the site or any association with its operators. This article is intended to be used, and must be used for informational purposes only. It is important to do your own research and analysis before making any material decisions related to any of the products or services described. This article is not intended as, and shall not be construed as financial advice. The views and opinions expressed in this article are the author's company's own, and do not necessarily reflect those of CoinMarketCap.